The next global recession may not start in America. It may start with oil. Right now, most people are watching the Middle East as a political conflict. But the real risk is economic. Because what is happening is starting to affect the core of the global system: energy, trade, and confidence. And when these three are hit at the same time, the risk of recession increases significantly. Let's break it down. First, energy. If tensions in the Middle East continue, oil supply becomes less predictable. Even small disruptions increase prices. And when oil rises, costs rise everywhere. Transport, production, and basic goods all become more expensive. This creates inflation pressure. But there is another layer. Higher oil prices also affect interest rates. If inflation rises again, central banks may keep rates higher for longer. And that means borrowing becomes more expensive. For businesses, for consumers, for the entire system. Second, trade. Global shipping routes are already under stress. Disruptions in the Red Sea and longer shipping routes increase delivery time and cost. This slows down global trade and reduces efficiency in supply chains. And when supply chains slow down, companies either raise prices or accept lower profits. Both outcomes weaken the economy. Third, financial conditions. Markets react fast to uncertainty. When energy and trade become unstable, investors reduce risk. This leads to volatility, weaker investment, and tighter financial conditions. Money becomes more defensive. Liquidity becomes weaker. Now combine all three: higher costs, slower trade, lower confidence. This is exactly how economic slowdowns begin. Not suddenly, but gradually. At first, it looks manageable. Then pressure builds. Businesses delay decisions. Consumers spend less. Growth slows. And then it becomes visible. Now here is what makes this situation more dangerous. The global economy is already fragile. Debt levels are high. Growth is not strong. And many countries are still recovering from previous shocks. That means the system has less flexibility, less protection, less room for mistakes. So even a moderate disruption can create a stronger impact. This is why the current situation matters more than most people think. Because global recessions are rarely caused by one single event. They are caused by multiple pressures building at the same time. Right now, those pressures are already forming. This does not guarantee a recession, but it increases the probability. And the longer this situation continues, the higher that probability becomes. Markets may stay stable for now, but under the surface, the system is adjusting. And when adjustments happen slowly, they are often ignored, until they are no longer small. This is how risk builds. And this is why what is happening today could shape what happens next in the global economy.